This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on Thursday, January 17th, 2019. Our time is 8:10 Mountain. Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com. Get the companion to the podcast, our free weekly newsletter. Everything we talk about today will be in the newsletter. The numbers this morning. US dollar at 96.10, Canadian dollar 75.11, the euro at 1.13, the pound at 1.29, gold at 12.91, silver 15.49, gold-silver ratio 83, platinum is 8.06, this is the big one, palladium 13.68, up $25 today. It is really taking off. WTI 51.58, Brent 60.67, Nat Gas 3.54, Bitcoin in US 3,590.73, Bitcoin in Canadian 4,777.38, the Dow at 24,160, S&P 26.16, Nasdaq 7,019, the TSX at 15,111. The shutdown in the United States, 26 days old. Brexit is an absolute mess, and we'll talk about palladium and gold as the podcast continues. If the shutdown lasts 2 more weeks, the cost to the economy will exceed the price of Trump's wall. They're talking about the shutdown costing the economy major growth. Jamie Dimon, the CEO of JP Morgan Chase, who's bullish on the U.S. economy, said the partial government shutdown could wipe out growth from the world's biggest economy. A federal judge on Tuesday denied a request from a federal employees union to require the government to pay air traffic controllers who are currently working without pay during the partial government shutdown. Also, cybersecurity is at risk. As a result of the government shutdown, they don't have all the IT staff they would normally have. As a result, cybersecurity at risk in the United States. One thing that I thought, Harold, was just outrageous. So here you are. You're a government employee, you don't get paid on Friday, you're not at work, they order you back to work and force you to work without pay, which it just is astonishing to me that you can make people work without paying them. It just is outrageous to me.
It really is. It really is. And the hardships that this is causing those people, because as government workers, you're not talking about people that are making huge money. You're talking about people that are just really getting by. So 75% of Americans live paycheck to paycheck, and that's exactly what's going on. They're now going to miss this Friday their second paycheck, and it's obviously the hardships are tremendous. People are trying to help out as much as they can, but the fact is you're talking 800,000 workers. There's no doubt that when these workers are not at work, that there are going to be areas that are in lapse, and one of them is what you just brought up, security. So the fact is that how can they force you to go back to work and not get paid unless they're promising to give you all of the back pay? You know, and personally, if I was in that position, just to sit at home and not do anything is something that I wouldn't want to do. I would still want to go to work and do my job. So when, the government does reopen, that I'm not so far back behind that it's going to take weeks or months to catch up type of thing. But again, it's just a very, very difficult time, and Trump is just not backing off at all. And, how is this going to end? Is this going to go on for 100 days? Is it going to totally bankrupt, the government and the country and put us so far behind, all because of a wall? It's an unbelievable situation when you've got two forces, that are immovable, and nothing is getting done. So we're going to be almost into a month into the government shutdown, and nobody's getting paid, and there's going to be problems as a result of these people not showing up to work. It's a horrific situation. I think it's a true embarrassment to the country that this is happening, and the fact is that it's very detrimental to any type of growth moving forward. I mean, these poor workers that are not getting paid, it just rips your heart out when you hear the stories, Randy. It's just terrible.
The House passed another bill yesterday to remedy the partial government shutdown, with Senate Majority Leader Mitch McConnell saying it won't vote on the bill unless Trump supports it. The real economy effects of the standoff are mounting. The number of government contractors going unpaid is seen as large enough to impact growth this quarter. Federal employees are citing financial hardship as a reason for not reporting to work, with some tapping retirement accounts to make ends meet. One nice thing came out of Canada. Here in Edmonton, the air traffic controllers, Harold, sent pizza to air traffic controllers down in the United States as a show of solidarity. Big week in the UK. With her Brexit deal defeated by a vote of no confidence, British Prime Minister Theresa May is in as much the same position as she was at the start of the week. Today, she is in talks with some of her opponents to try and find a position on exiting the European Union that would command majority support in Parliament. With just 10 weeks left to the exit date, HSBC Holdings is saying that they're now more upbeat on the sterling, as the impasse suggests they may not have a Brexit at all. Others are not taking the risk, and they are voting with their feet, getting out of the UK. It was crazy because they voted on the Brexit deal. That failed. The opposition party, they voted for no confidence on Theresa May as the Prime Minister and her government. That did not pass. So here you have limbo land. The European Union saying, we're not negotiating this any further. We made a deal with you. You live with that deal and you get it passed. Harold, this is absolutely a mess with Brexit in the UK.
Unbelievable. Just unbelievable. I thought we were done with that. There's no doubt the result will be that the British pound is going to plummet. It's going to hurt everybody at this time. And you know something? Back in 2008 and 9, when the mortgage crisis hit and the markets plummeted, and so many companies were almost in bankruptcy, and the U.S. sold a lot of that bad bank debt to other countries that got into trouble also. These countries have not recovered, just like the U.S. really hasn't recovered. It's all been swept under the rug. It's just a matter of putting it off and putting it off and putting it off till one day it's going to rear its ugly head again, and that's what's happening now. And now all of a sudden, a couple of years later, you're faced with a dilemma that, is almost insurmountable. So this is not a good situation for England, for Britain. It's not a good situation for Europe. And the fact is, it's just going to add to the already, mammoth problems that are in those areas. So does it look like we could possibly be heading back into a horrible financial time worldwide as the U.S. is in big trouble with his government shutdown with no end in sight? And now you've got the Brexit situation affecting Britain and all of Europe, and China has got their issues, obviously, with the trade situations that Trump has imposed on them. Where are we going? How are things going to look bullish at this particular point? Things are not great in the economy in Canada either. So, what country is doing well at this point? None. The fact is that the stock market, the Dow, is back into trading into a range, up 100 points, down 100 points, really not much doing. And that's, being held in check by the plunge protection team. Because otherwise, there's no doubt with the amount of money, the amount of cash that was taken out of the Dow, out of the stock market in the last few months is substantial. The money markets is where all the money's going. So the fact is that with all that money coming out of the stock market, that market could have backed off another couple thousand points. But you've got a government organization that monitors it and controls it to an extent, and now the market is a lot more calm. However, the further and further we get into this, the government shutdown, and then the repercussions from China and soon Europe and Britain, you're going to see that it's going to affect the U.S. and Canadian economies even further. And I'm not overly bullish, on the world economies going forward. So the fact is that what markets could really benefit from all of this? Well, it doesn't look like the stock markets are going to do that, because they're going to be in limbo with problems in the U.S. and problems in Europe and problems in China. I just don't see the Dow coming back and making new highs or anything like that. Gold is having a major problem breaking 1,300. Now, 1,300 is only a psychological barrier for gold. 1,380, as we all know, is the major number. But if gold, with all this going on, with the government shutdown and Brexit and everything going on, if gold can't break 1,300, how much confidence do we have that it's going to break 1,380 and go to 15, 18, 2,000? So the only markets that I see at this point here, which I would not recommend because for most listeners, because it's way too risky of a trade, but is to short the British pound and to possibly short the euro. So, I see the currency markets as the markets that are really going to respond to these negative situations. But I think a lot of it is already built into the market at this particular point. So it's really just a matter of sitting back and waiting to see what these markets actually do. We're not into chasing markets on the up or the downside when the news is already out. As the old saying goes, you buy the rumor and you sell the facts. So Britain and Europe are going to be back in trouble again. The U.S., if this continues to go like it is, I don't see Trump backing off. He would lose all credibility. So he's not going to back off. There's no way. The only ones that could possibly back off are the Democrats. And again, at this point here, they're not doing that. But as more and more pressure is thrust upon them, and people start to realize, the economy has lost way more money than this stupid wall is going to cost us, just give them the wall already. Because before this whole thing is over, it's going to be a situation that that the country could be crippled by this. So, and how many people could really afford to go months without any income? So again, it's a horrible situation. I don't see a short-term solution, except that Trump or the Democrats are going to ease off, and that's just not going to happen at this time. So I don't see anything happening. Trump is just a bully, and he's adamant, and he made a promise to the American people that he was going to do this, and he's not going to break his promise. And for that, I commend him. But to what extent do you keep your promise, and how many people do you hurt before you make some type of deal that will get these people back to work? The problem is that the Democrats want the government to reopen, and then they'll move forward and discuss the wall. And that, what the result of that is going to be. Now that everyone's back to work, they're going to say, no, we're not going to do it. And Trump's going to look like an idiot. So he's not going to do that. He's going to stick by his guns. He's going to wait for that money. He's got the opportunity to do it. He can squeeze right now as hard as he wants. And eventually he's going to get his way at whatever the cost is, let alone the 6 or 7 billion it's going to cost to build the wall. The fact is that it's going to cost way more than that because of the downturn in the economy and the fact that all these people are not going to get paid. Now, with all the money that is owed to the government workers, one of the reasons that the government is shut down is due to financial reasons, that that they couldn't keep the government open without additional money coming towards the government. So I just don't see this getting better, Randy. I see it as a stalemate, basically. And the longer it goes on, the worse and worse and worse the situation is going to get.
There's a residue effect for Canada. JP Morgan cuts loony forecast as the USMCA, which is the new NAFTA deal, faces turbulence. A current political turmoil in Washington threatens to bleed into the ratification of a new regional pact between the United States, Mexico, and Canada. Now, JP Morgan Chase & Company sees the Canadian dollar getting caught in the crossfire. The bank now expects the Canadian currency to weaken to $1.35 per dollar by the middle of 2019, having previously forecast that it would be around $1.30. A key reason for the pessimism is the outlook for the passage this year of the agreement. Now, their analysts say that ratifying the pact will be bumpier than most investors realize, given the deep fissures within a split U.S. Congress, as well as ongoing partial government shutdown problems. So they're saying the Canadian dollar that tumbled 8% against the greenback last year, the second worst performing among the group of 10 currencies, is going to take a further hit as a result of NAFTA, the new NAFTA USMCA, not being ratified. Janet Yellen came out this week, the former Federal Reserve Chair, saying that she thinks the central bank may have implemented its last rate hike of this cycle, meaning they will not raise rates again. The next will be a cut at some point. Federal Chair currently, Jerome Powell, says he's very worried about growing U.S. debt. I'm very worried about it, Powell said. This is a long-run issue that we definitely need to face, and ultimately we have no choice but to face it. Total U.S. debt is about $21.9 trillion, of which $16 trillion is owed to the public. The sustained annual U.S. budget deficit is now believed to be more than $1 trillion. One of the things that Trump is fighting with China on is a trade deal, and the U.S. trade deficit, that's something that he wants to improve. China's trade surplus with the United States, closely watched amid the tariff war between the two countries, grew 17% from a year ago to hit $323.32 billion in 2018. That's the highest on record since 2006. Harold, it just goes to show there's a lot of things out there when it comes to investing that you need to keep in mind. We have the government shutdown. You have Brexit. They need to raise the debt ceiling at some point. They need to ratify the new NAFTA. They have the trade deal with China. It's just a crazy time in the United States.
It's a crazy time in the United States. And, laying it out the way that you just did, you would go short these markets because there's nothing positive there. But you really can't go short the markets at this time because of that government plunge protection team. That's what I've always talked about on the show. And it happened in commodities at a time back in 2008, 9, and 10 when we saw, some of the exchanges doing things that were totally illegal, and somehow got the go-ahead by the federal government to manipulate certain markets like they did in gold and silver back in 2011 when they raised the margin requirements so many times in 1 week that it caused the market to go from $1,900 to $1,050. There was no reason for gold to do that. None whatsoever. There was nothing in the marketplace at that point that would have made the gold market fall. But on the other hand, you look at the stock market with all this negative news that is in the market at this point, a $20 trillion debt, the problems with China, government shutdown, the potential Brexit situation, Amazon and Apple and Google all losing 30% of their, stock value type of things. You would think that the market would be sitting right now at about 15,000, not 23,000 that is sitting at right now. And that's because the markets are manipulated. And that's the worst thing because this is supposed to be a free market, meaning that you have the right to make your own decision. You have the right to go long or short the market if you feel the market's going to go up or down. But when the government has its own agenda and won't let the market come down, that takes all of the credibility out of the marketplace. Now, obviously, Wall Street, loves this type of thing because it stops their market from plummeting. But if this market was able to react like the gold market was able to react, where there was no plunge protection team in gold and silver, we'd be talking about a totally different situation. When all of a sudden, gold is on its way to $2,000. It goes up to $1,920 and looking like it's about to go to $2,000 or more, and all of a sudden it plummets in the way that it did. It was an orchestrated move. And that's what really bothers me about the U.S., the way that they allow certain markets to trade as long as it's in the best interest of the U.S. and it's not going to hurt the overall economy. Well, that's a fixed game because, in the stock market, as in the commodity markets, for every buyer there's a seller, for every winner there's a loser. When the market goes down, it's because somebody shorted the market and made all the money when it went down. It's not like the market goes down and you just lose because you're going the wrong way. Somebody else made that money. And the fact is that the market cannot trade at this point because it's too detrimental to the overall economy, I think is just criminal. The market should be able to reflect the economy. That's what the Dow Jones is supposed to do. And it's really not allowed to do that, which is one reason the major reason why I have not invested in that market since 1999.
I agree with Harold. It's a disappointing time when you don't see gold break above 1,300, considering all that's happening in the world. Some good news, and you can see this in our free weekly newsletter. Get it from Harold via rarecoloreddiamonds.com. Our chart of the week in the gold, silver, and platinum section. Gold has historically outperformed equities during periods of market stress. Counting 11 episodes beginning from the 1987 market crash, gold has increased an average of 6.8%, while the S&P has declined 19.4%. For the record, gold outperformed equities in 2018, declining 1.6% versus a loss of 4.4% for the Standard & Poor's 500. As almost all investors can attest, the S&P index masked the full extent of the decline in equity markets due to a high concentration of the index in a handful of stocks that outperformed run-of-the-mill stocks. Gold outperformed all currencies last year except for the Swiss franc and the Japanese yen. It also held its own against bonds, roughly matching the 0.9% increase in the U.S. 10-year bond. We are getting toward where we could see a recession. We're seeing turbulence, and you do want gold in your portfolio.
Yes, you definitely do. Most people, though, are short-term thinking when it comes to investing in traders. So when you see a market that isn't moving, and I mean, is it really any consolation that gold dropped less this year than the S&P 500? Neither one really made any major amount of money. So, when you look at gold, when you consider the carrying cost of gold, the commissions to buy gold, the contango, basically, you can't sit there and be happy with a $10 or $20 or $50 move in that market for the year. It doesn't make you any money. In order to be, in a market like gold or silver or stocks or whatever, you need movement. You need volatility. There's two participants in the futures markets. There's the hedgers, which are the, manufacturers, the farmers, the people like that use the futures market to hedge their crops and their cattle and gold and manufacturing and mining and all that. And then you've got speculators that come into the market and add liquidity to the market and add volatility to the market, which really makes the markets work, because if it was just hedgers in the market would just sit there. Nobody would have an opinion on which market is, going to do anything. However, when you have speculators in the market, they have opinions. They're looking to make money on news that comes out, crop reports or mining reports or anything along that line. If the markets are not moving, there's carrying costs to holding gold, just like there's carrying costs keeping cash in the bank. So if gold isn't moving and it trades in a range, it's not going to attract speculators. What it will attract is day traders. People that know enough about the market that they can, pick up $10 here on the upside or on the downside. But for those of us that are long-term investors, we're looking for an entry point. And basically, I'm very disciplined in the way that I trade because, there's two numbers that I'm personally looking at: 1,050 on the downside and 1,380 on the upside. And that's a big spread, unfortunately. It's a $330 spread that if gold was at 1,050, I would not buy gold until it broke $1,380. And I'd be giving up $350 worth or $330 worth of movement in the market to confirm that gold is now in a bull market. So one way, if you bought it prior to it breaking 1,380, you're just out and out gambling. And that can hurt you, because the last time we saw gold get close to 1,380, which was earlier in the year, it got to 1,370 and change. We were getting ready to buy it. And when it didn't break it, and you need to see two closes above 1,380, when that didn't happen, the market fell all the way back down to 1,180. So that's what I'm talking about. If we don't get confirmation on certain trades, on certain markets, then it doesn't make sense unless you're just an out-and-out speculator that's going to take the risk and say, I don't want to give up $100, $200, $300 worth of market movement. I'm going to take my chances right now. So that's not the way that I personally do it. It's not the way that I would recommend it unless, again, you've got the risk capital in which to do it. But what we have right now is a stalemate in the markets. We've got a stock market that's going nowhere right now, and we've got commodity markets that are not doing enough to attract people, new speculators, to come into the marketplace. And until we see something break out to where either the US dollar is going to fall substantially, which would make gold move substantially on the upside, but if there's not going to be another interest rate hike, in actual fact, we're going to see possibly a reduction in interest rates, that could literally start to push the dollar lower, because what strengthens the US dollar, one of the major things, is a rise in interest rates. So if that's off the table at this point, and we could actually see a reduction in interest rates, that could lower the dollar and that could propel gold. But that's not enough to propel gold to where it makes sense for us to go in for to put new money into the gold market. I haven't sold off a lot of my gold. I still hold a lot of physical gold. But the fact is, I haven't bought gold in a long, long time.
Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com. Get our free weekly newsletter, the companion to the podcast in the newsletter. Gold posts the worst start to the year since 2003 after a rally. South African gold output has the longest losing streak since 2012. Goldman predicts gold prices to climb to their highest since 2013. Also, Brexit turmoil has had UK investors buying gold. Ross Norman wrote an article, Gold hits an all-time high in 72 different currencies. Newmont Mining is going to buy Goldcorp for $10 billion, and that will create the world's largest gold miner. Also, PIMCO favors unloved platinum over gold. Ted Butler has written an article about silver manipulation. He believes that JP Morgan is controlling the silver market, and he has an article about that we have in our free weekly newsletter. Two articles we want to touch on: Harold's website, rarecoloreddiamonds.com. For those that might have missed those articles, the best investments of 2018, art, wine, cars, also fancy colored diamonds. People are looking for a place to put their cash, and the security of holding something physical is appealing, according to Anthony Maxwell, director of Livex, the London-based wine exchange. But in 2018, art, wine, and cars, along with rare colored diamonds, did very well. The story we just mentioned was from the Wall Street Journal. This is from Barron's. Colored diamonds expected to shine in 2019. And we mentioned this last week, but it bears repeating. Tracked by Knight Frank as one of 10 luxury investment assets, along with jewelry in general, art, wine, watches, and cars, the value of colored diamonds has appreciated 70% in the last decade, or about 12% every year, according to the 2018 Knight Frank Luxury Investment Index. If you did not read these two articles, get them from Harold. We will send them out to you in our free weekly newsletter. From the Wall Street Journal, the best investments of 2018, and then Barron's Colored Diamonds expected to shine in 2019. Harold, two very strong stories that advocate for what we've been talking about for a long time, hard assets.
You bet. Again, the markets are going to be the markets, and there's definitely a lot of people that trade them that are comfortable with them, and no matter how many times they've seen their fortunes, taken away from them in 1999 and 2000, when the NASDAQ dropped from 5,000 to 1,000 and the Dow plummeted in 2008. I mean, how many times can that happen? If you're younger, you can withstand this, but why would you want to? Why would you want to make a bunch of money and then see all your money disappear and then wait another 5 years for it to come back again? You've got to have a better game plan than that. So, again, at this particular point, I don't have a lot of faith in the stock markets at this point. If I was to buy any commodity at this particular time for the longer term, it would be platinum. There's no doubt in my mind. I'm blown away that palladium broke through 1,300 like it was standing still and is at this level. Back in the day when we first started recommending palladium at $170, I had did a presentation on palladium when it had gone to 1,200 previous to that, and it almost wiped out the Ford Motor Company because they bought it in the wrong way. So again, to see 1,300 and change in palladium at this point is a little bit shocking. But the same reason that palladium went from 170 to 1,300 is the same reason that platinum is going to go from 800 which is probably where it is, 900 at this point, where it could definitely go back to $1,400. So if I was to buy anything for the longer term, I would be buying platinum physically in the coins.
806 platinum today, palladium 1368, up $25. As we get to the end of the podcast, John Bogle, the man who created the first index fund in 1975, founded Vanguard. They have trillions of assets under management, passed away. And he warned in November about his invention, expressing concern that index funds may eventually own half of all U.S. stocks. He said, "I don't believe that such concentration would serve the national interest." Eddie Lambert, the billionaire who was running Sears, some would argue maybe drove it into the ground, reached an agreement to keep Sears open. So Sears does live another day. The CDC says it's another bad year for flu. Up to 7.3 million people sick so far. Most Americans don't carry cash. In an average week, roughly 3 in 10 adults say they make zero purchases using cash. Those that do carry paper money have less than $50 in their wallets. For all the studies that tell us how important it is to limit screen time, we're spending lots of time in front of screens. The survey says Americans spend nearly half of their waking hours looking at screens, as I look into the screen of my iMac. And finally, Harold, for those who want to invite the family over for a good feed of mac and cheese, Costco is selling a $90 tub of mac and cheese that weighs 27 pounds, and the best part is if you don't polish it off on the first visit, it's good for 20 years.
Oh, my God.
That's one way to make sure that the relatives never come back for supper again. Have a tub of mac and cheese, and hey, bring your plate over here. Don't worry, it lasts 20 years.
Unreal.
I don't know how it tastes, but hey, we'll feed you. And they say that you can put that next to your 7-pound bucket of Nutella and 40-pound bucket of honey. Very funny, Harold.
I won't be indulging, my friend. That is not something that would be of any interest to me. But again, we all want to make money. There's no doubt about it. But the fact is that if the situation is not right, you sit back and you wait for your opportunities. And right now, the problems that we're facing, some of them are insurmountable. So until you get a firm direction or a change in policy or whatever, the markets are going to do what they're going to do. If these markets were legit and you could really trust them, I would be short the stock market. There's no doubt about that. That's what I would be short. But because you can't trust it and because it is manipulated, it's something that I wouldn't even ever recommend. If we're looking for a better long-term trade, I think the platinum is basically as close to the bottom as it's going to get. And I do believe that you're going to see that the price of palladium will get so high that it'll outprice itself, and then the manufacturers are going to go back to platinum. So I think that would be a good, worthwhile trade. If you have any additional cash sitting around, just go to a high-end coin store and start to buy either platinum bars or platinum coins, and I think that you're going to be very happy with what the returns are. So again, at this particular point, the markets are just too up in the air and trading in ranges and just not worth going into at this point, because if we can't make a big profit, it's not worth the risk, and these markets are too risky at this point.
As we end the podcast, we have football this weekend. Even though my Green Bay Packers are not in there, I am so excited. Los Angeles playing New Orleans in New Orleans, the Patriots in Kansas City. Harold, good luck to your New England Patriots. We have 2 great games that will lead to the Super Bowl. You're a fan of the Patriots, and I was saying to you when we hooked up here this morning, I am excited. I can just imagine how excited you are.
Well, a minute doesn't go by that I'm not reading every report on it. I'm a sports nut. So I'm really pulling for it. It's going to be a very difficult win for them. They're playing in Kansas City, that has the hometown crowd. They were saying that an Arctic freeze was coming in and it was going to be below zero, but now they've upped it to 20 some odd degrees. So believe it or not, that's warm in Kansas City at this time. All in all, just very proud of my team. Glad that they've got this far, and I'm going to be rooting for them. I think it's going to be a great weekend.
Good luck to the Patriots. We hope that they come through for Harold and go back to the Super Bowl. Thank you, Harold, for another podcast.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. That's it, another edition of the World Financial Report podcast. My name is Randy Marshall for Harold Siegel. We will talk to you next week.